What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put at least 1 penny in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new account today. Go get that free stock. Go get that free money. The Fed just increased short-term interest rates by 25 basis points in their meeting today. Now, that was not a surprise. The market already knew and predicted that they would increase short-term interest rates by 25 basis points. So that takes the Fed funds rate, aka short-term interest rates, to 4.50. So in the last year, short-term interest rates have went up by 4.5%. So if you're somebody at home with the equity credit line that has a variable rate attached to it, and the prime rate at the time you took that out, let's say 2 years ago, was probably 3%. In today's environment, that line of credit interest rate is probably around 7.5%. So if you got money on that line of credit outstanding, my recommendation is do everything in your power to pay it off, because these interest rates are not going to be coming down anytime soon. Matter of fact, the Federal Reserve has indicated for 2023 that they're actually going to raise interest rates by 75 basis points. We got 25 today, so we got 50 left. They will be meeting again in March, so be on the lookout for another 25 basis point increase. The good news is, after the Fed increased short-term interest rates today, the Fed Chair, Jerome Powell, had some comments. And I listened to those comments. And for my opinion, they were good comments. I didn't hear anything indicating they were not pleased with the progress of inflation coming down. I think we're in great shape, guys. I think right now is critical, though, for us that are looking to buy paper assets to build wealth. We still are heavily discounted on all of our favorite companies, our favorite ETFs. Here is an opportunity for you before inflation comes down all the way and the new bull market starts. Start getting in, start buying these paper assets right now, guys, while they're still heavily discounted. The goal is we want to buy these assets, blue chip assets. We want to buy them when they're low, when they're trading at a discount, and then we want to hold them until they're trading at a premium again. And right now is a great opportunity to do that. So please don't hesitate. Get your brokerage account open. If you don't have one, click on that Webull link below, open up your Webull brokerage account, put some money in there, and start thinking about buying these paper assets while they're on sale. So what did the Fed chair say about inflation? What is still too high? Because think about it. Inflation is still 6.5%. We want it at 2%. Couple of things he said in his remarks that stood out to me was housing inflation is still pretty high, and labor market inflation is still pretty high. So those two things are really propping up inflation and keeping inflation at 6.5%. Will that come down? I think it will. I think it will in the near future, especially the labor market, because again, with these interest rates being so high, short-term interest rates, it's going to force companies to cut back because companies are not going to be able to borrow money cheaply with rates as high as they are. It doesn't make sense. They can't borrow money at 7, 8, 9%, 10%, and then expect to take that money and make more money on top of that. It's not going to happen. Companies thrive and borrow money when money is cheap, 2%, 3%. And then they can take that money and turn around and get an 8% return on it, minus out the 3%, and that other 5% is profit for them. Right now, they can't do that. So when companies are not growing, they don't need what? As many employees. Now, a lot of you might say, well, if that's the case, why isn't the labor market softening? Well, that's because of the service industry. That's one of the big reasons why the labor market right now as a whole is still doing well, because of the service industry. You guys got to understand, man, this country was locked down for a couple of years due to the pandemic. Now that we're on the other side of the pandemic, no, still a big problem for us, but not like it was in 2020. People are starting to do what? They're starting to travel again. They're starting to take vacations. They're starting to enjoy life again. How are they affording to do all of this? Remember, guys, that pandemic real estate boom. A lot of these people who own homes and bought them prior to the pandemic, they have a ton of equity in their homes. A lot of these people have sold these homes. I know here in Southwest Florida where I live, these people who bought houses in 2020 and before that, they had over 50, 60, 80, 100% return on their money. I mean, they had so much equity in their homes, they started selling them. And then they took a part of that equity and now they're starting to enjoy life again. And I think that's where a lot of the money is coming from. Also, we've gotten a lot of foreign money, international money coming into our real estate market because a lot of these people who live in these foreign countries, they're trying to take some of their money out of their country, out of their country's currency and put it in US dollars. And they do that through buying real estate. So I understand why the real estate market still is very high when it comes to inflation because prices are still overpriced, in my opinion. At some point, they will come down. They have to in order to get inflation back to 2%. And that's going to happen relatively soon. Why? Because of 30-year fixed rate interest rates. They're super high. They're like 7% right now. And a year and a half ago, they were 3%. So that's going to force housing market inflation to come down because of the high interest rates associated with borrowing money to buy real estate. It's too expensive. But overall, man, good comments from the Federal Reserve Chair, Jerome Powell. Again, the stock market wasn't affected at all. And the reason it wasn't affected is because that was all priced in. The chairman didn't say anything in his comments that was not already priced in. So the three major indexes all held fine. Matter of fact, prior to making this video, the NASDAQ and the S&P 500 were actually up, right? So they were actually doing better after the comments and after the rate bump. So I think right now the stock market is poised to make a run in 2023. I'm going to continue to dollar cost average in, guys. I'm going to continue to invest in paper assets. I'm going to continue to buy S&P 500 ETFs. I'm going to continue doing it and continue doing it because the goal is to buy as much as I can afford to buy because I know on the other side of this bear market, on the other side of this high inflation, we got better times coming. Every bear market is followed by a bull market, guys. We know that. So let's not act like, oh, this has never happened. It happens periodically, guys. It really does. But what also happens periodically is bull markets. And when this next one comes, all of these assets that I've accumulated at a discount are going to be trading at a premium. And that's where I'm going to make the next part of my net worth is right there. Buying assets at a discount, holding them till they trade at a premium. That's how you build wealth, guys. Also, I think opportunities coming in the real estate market, but it's going to take a couple years, probably 2024, 2025. There's going to be some opportunity in the real estate market. So get ready for that. Get your income up, get your credit up, and get your down payment money up. Those are the three things you're going to need if you want to buy real estate for income, guys, right? So get that ready to go. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get those free 12 stocks, up to 12 free stocks. Go get them, guys. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.